So hi friends, so this is PK sir. I'm back with another video. Now many of you are asking me to make a part 2 video on standard costing. Okay, so of course, so I thought that anyway so many students have asked me, so let's do this. So without wasting any further time, let's go with the part 2. Right, Nana? Now whoever is watching this video for the first time, I would rather ask you to go to standard costing part 1, view that particular video, and then come back to this video, okay? Because this video will be a continuation of part 1. Okay, Nana? Right, chalo. Now, let's rewind a few things that is really important for this video. First one is, what are the different types of variances that you will have? Normally, types of variances can be classified into two. One is cost variances, other one is sales variance. There are so many types of variances, Nana, but this is what we can call frequently used variances, because most of the times it's all about manufacturing companies, and therefore you'll find cost and sales variances frequently. Okay, but please understand, this is not a exhaustive list. Apart from these variances, you'll have so many other variances as well. Okay, so cost variances can be again classified into three categories. One is material, the other one is labor, and the third one is overheads. Now again, overheads will be further classified into two. One is variable overheads and the other one is fixed overheads. Coming on to sales variances are classified into two categories. One is total approach and the other one is margin approach. You can call it as margin approach, or you can also call it as profit approach. Okay. Now again, profit approach or margin approach will be further classified into two. One is as per absorption costing system, and the other one is as per marginal costing system. You got the point, Nana? So this will be the coverage of standard costing, okay, predominantly. So there are two types of variances. One is cost, other one is sales. In cost, you have three types of variances. One is material, labor, and overheads. Overheads will be further classified into two: variable overheads and fixed overheads. Coming on to sales, it's again classified into two. One is total approach, the other one is margin or profit approach. Margin or profit approach will be further classified into two. One is as per absorption costing system, and the other one is as per marginal costing system. Okay, right. Now, apart from this, we can have one more classification for types of variances. That is, ultimately, there will be two types of variances. One is favorable variance, and the other one is adverse variance or unfavorable variance. Okay. Now, what do you mean by favorable variance? What do you mean by adverse variance? I've seen many students, they think that something, if at all you calculate any variance by using a formula, if you get a positive number, then that is referred as favorable. And if you get a negative number, then that is referred as adverse variance. Okay, this logic applies for cost variances, this blind logic. Okay, this blind logic applies for cost variances. So where after applying the formula, if your variance is positive, then you call it as favorable. If your variance is negative, I mean the number is negative, then you call it as adverse. And then the blind logic applies for sales variances also, where the logic will be exactly reverse. If you get a negative number, then it will be referred as favorable variance. And if you get a positive number, then it will be referred as adverse variance. Now, although this blind logic helps you in solving sums, but ultimately you need to know the reason behind why a particular variance is called favorable and why a particular variance is called adverse. Very simple, the logic is with respect to actual profit. Now, any variance that has the effect of increasing your actual profit will be referred as favorable variance, and any variance that has the effect of reducing your actual profit will be referred as adverse variance. You see, the reasoning is very simple. You calculate any variance. After calculating the variance, you try to find out the effect on the actual profit. If that variance increases the actual profit, then that will be referred as favorable variance. And if that variance reduces the actual profit, then that will be referred as adverse variance. You understand that? So if cost increases, it will reduce your actual profit. Therefore, minus will be adverse and plus will be favorable. Whereas if sales increases, then it is good only because your actual profit will get increased because of increase in sales. And that is why these two are exactly opposite to each other. Okay. Anyway, don't worry. We'll discuss this further once we go to each and every individual variance calculation. Got it, guys? Now, one more doubt that many of the students have got is, sir, when I'm trying to learn standard costing, should I learn it based on formulae or should I go by logics? Okay, now it again depends. If you are a student writing Indian Chartered Accountancy exam, like CA exam, then because the time limit is very much less and you have to solve the solutions faster, I would rather ask you to learn both formula as well as logics. Okay. Even for other students also I would recommend the same because knowing logics is fine, but at times what happens, it takes time for you to apply the logics and then solve the problem, whereas knowing the formula will actually help you to solve the problems faster. It will accelerate your solving skills. Okay, so that really helps whenever there is a time constraint. Okay, so in this particular video I'll try to teach you both the formulas as well as logics. First I'll go with the formula. You try to just grasp the formula. Once the formula is done, then I'll explain you the logics behind the formula as well. Okay, guys, chalo, let's move on. Now, first let's start with material variance. In this, first you have material cost variance. Okay, material cost variance is divided into two categories. One is price variance and the other one is usage variance. Now, usage will be further classified into two. One is mix variance and the other one is yield variance. Now here the point that you need to notice, only when there is more than one type of raw material, that is when you have multiple raw materials, only then you'll have mix as well as yield variance. If you have only single raw material, then you'll get price variance and usage variance, that's it. Again, usage will not be further classified into mix and yield. So this further classification of usage into mix and yield will happen only when you have more than one type of raw material. So this is one point that you have to keep it in mind. Okay, initially anyway I'll go with the logics. So try to understand, initially I'll go with the formula. So try to just look at the formula, then I'll go with the logics. So totally there are four numbers here, four formulas. The first one will be SQ into SP, second one will be AQ into AP, third one will be AQ into SP, fourth one will be RAQ into SP. Okay, now let's try to understand each and every of this numbers. Right, let's start with SQ. What is SQ? SQ means standard quantity of raw material required for actual output. So this is SQ, standard quantity of raw material required for actual output. In other words, SQ is nothing but raw material allowed. In other words, what is SQ, Nana? Raw material allowed. In case you have any doubt, please watch the first part of this video. First part of standard costing. You'll get better idea. SP is nothing but standard price per unit of raw material. AQ is actual quantity of raw material consumed for actual output. AP is actual price per unit of raw material. And AQ anyway, SP already we know. And what is RAQ? RAQ means it is revised actual quantity. So what do you mean by revised actual quantity? It is actual quantity, okay, rewritten in standard proportion. Okay, guys, it is actual quantity rewritten in standard proportion, right? So when you take actual quantity and you rewrite that, you rewrite them in standard proportion or standard mix, then you'll get something called RAQ. Now let's go with the formula. So this is 1 minus 2, this is 3 minus 2, you have 1 minus 3, 4 minus 3, and 1 minus 4. So this is your formula with respect to material variances. Now initially you have to by heart this formula. If at all you have to solve the sums faster. But anyway, I'll try to explain you the logics as well. Okay. Now that we have seen the formula, let's go with the logics. Now, the logics are pretty simple. Whenever you try to create any formula, the intention behind creating the formula is that once you apply the formula, okay, once you apply the formula, After that, it should give you a meaningful number, right? Whatever the number that you get after applying the formula, you should be in a position to use that number. Otherwise, this formula is useless. Same logic has been applied over these formulas in standard costing as well. Therefore, one thing that you need to understand in all these formulas is there will be only one change, which means only one variable will be changing and all other variables will be constant. Are you able to get me? So this is one standard logical application with respect to all the formulas in standard costing. So there will be only one change and all the others will be constant. For example, let's start with material price variance. So there will be only one change. What is changing? Price is changing. So material price variance means price is changing. And what will be constant? Everything else will be constant. Let's say quantity or usage. So usage variance is what, Nana? Constant. Let's start with the another variance, material usage variance. What will be changing? I told you there should be only one change. So what is changing? Usage is changing. So when I say usage is changing, usage is nothing but quantity. So which will be constant? Price is constant. You understand that? Same logic applies for all the variances as well. So the logic behind all this formula where there should be only one change and all the others must be constant. Only then the resultant number that you get after applying the formula can be useful. You got it? So for example, if we are calculating material price variance, only price should be changing and quantity or usage must be constant. Material usage variance means only quantity or usage must be changing and price must be constant. Are you able to get me? Right. Okay, Nana. Now see. Let's start with the first one, material price variance. You know the formula, the actual formula is 3 minus 2. But without using the formula, let's try to put the formula for this. I mean, without using the formula, let's try to understand how to calculate material price variance. I already told you the logic. What is the logic? Price will be changing and quantity will be constant. What price and what price? There are only two prices. One is standard price and the other one is actual price. So difference between prices is nothing but price variance. But we want this number in absolute rupees, right? So in absolute rupees you want this number, therefore you need to multiply price with quantity. What quantity? It is actual quantity. Now the question is, there are two types of quantity. One is actual output or actual quantity, the other one is standard quantity. Just a second, Anna. All right, one is actual quantity, the other one is what? Standard quantity. I told you that when I'm talking about price variance, price will be changing and quantity will be constant. So what quantity will be constant? Actual quantity will be constant. Are you able to get me? So the formula will be standard price minus actual price into actual quantity. Coming on to the next one, material usage variance. Going by the logic, I told you what must change? Usage means quantity must change. So what quantity and what quantity? Standard quantity and actual quantity. Are you able to get me? There are only two types of quantities. So difference between quantities. And when I say when it comes to usage variance, quantity must change and price must remain constant. So what price must remain constant? Very simple. There are two prices. One is standard price and the other one is actual price. So which will remain constant? Standard price will remain constant. Are you able to get me? So always when it comes to price, standard will remain constant. Always when it comes to quantity, actual will remain constant. Now, there's a simple logic behind that. See, standard price is a more reliable number when compared to actual price. Are you able to get me? Because standard price is not affected by temporary fluctuations, whereas actual price is affected by temporary fluctuations. Are you able to get me? So standard price is something that is a standard which has been set by you. So you will set the standard after doing a lot of research, analyzing a lot of things, and therefore it is not affected by temporary fluctuations. Whereas actual price is definitely affected by temporary fluctuations, and therefore when you are trying to find out the efficiency of the labor, that is why you are calculating material usage variance, right? If you take actual price, then unnecessary inefficiency of the purchasing decisions or the purchasing department will get into this particular variance, which is not good for the labor who are actually manufacturing these products by using the raw material. Are you able to get me? So let's try to keep it simple. When it comes to price variance, price will change and quantity will remain constant. Which quantity will remain constant? Actual quantity. When it comes to usage variance, quantity will change and price will remain constant. So which price will remain constant? Standard price. Why? Because standard price is a more reliable number. It is not affected by unnecessary temporary fluctuations, and therefore whatever the efficiency or inefficiency of the purchasing department will not creep inside this material usage variance. Are you able to get me? Okay, right. Chalo. So that should be enough. With this, we'll try to do a formula over here, right? Sorry, we'll try to do a problem. Look at this problem, Nana. The following data are available for a product. Standard material cost of unit of output is 2 kgs at rupees 20 per kg. During a period, actual details are as under. So you're required to calculate material variance. So you have actual output, material used, actual price per kg, right? The moment you read this question, the first point that you have to understand is there is only one raw material. So when there is one raw material, what will happen? You will not get mix and yield variance, because mix and yield variance you will be getting only when there is multiple raw material. Whereas in this problem, there is only one raw material, therefore there is no mix as well as yield variance. In that case, it will be like this: material cost variance divided into two. One is price variance, other one is usage variance. So the formula will be 1 minus 2, 3 minus 2, and 1 minus 3. So 1, 2, and 3. So what is the first one? Standard quantity into standard price. Second one, actual quantity into actual price. Third one, actual quantity into standard price. You got it? So these are all the formula. Now let's start with one by one. First one, SQ. What is SQ, Nana? Standard quantity of raw material required for actual output. So the standard quantity of raw material required per unit of output is 2 kgs. So 2 kgs into standard quantity required for actual output. So I'll try to write this formula one more time. See here. Let me go to the eraser. Yeah, okay. Right, Anna. So I'll write this formula. I'll rewrite it. Standard quantity for actual output into standard price. That is the whole meaning. Okay. So what is standard quantity per unit of output? 2 kgs into actual output is how much, Nana? Here you have actual output. How much is that? 10,000 into standard price is how much? Here you have the standard price. How much is that? 20. You got it? So it will be 1, 2, 3, 4, 5. So it will be 4 lakhs. That is your formula 1. Coming on to formula 2, actual quantity into actual price. I told you what is AQ? Actual quantity of raw material consumed for actual output of finished goods. So what is actual quantity of raw material consumed or used? 22,000. It is directly given. Into actual price, that is also directly given. How much is that? 25. Okay, then you have actual quantity. How much? 22,000 into standard price is how much, Nana? 20. That's it. We're done with all the numbers. Now it is just a mere calculator work. Once you use the calci and then you do 1 minus 2, 3 minus 2, and 1 minus 3, you'll get your answers. So it's pretty simple and straightforward. Are you able to get me? Right, guys? So the blind mark is whenever you apply this formula, if you get plus, I mean positive number, you call it as favorable, and you get negative number, then you call it as adverse variance. That is a blind mark. Otherwise, once you calculate the variances applying this particular formula, you try to think whether it will increase the actual profit or it will reduce the actual profit. If it increases the actual profit, then it will be favorable variance. If it reduces the actual profit, then it will be adverse variance. So that should be easy for you to solve this kind of problems. You got it, guys? So this is another video, guys, where I try to explain you the basic concepts of standard costing. We'll go with part 3, where I'll try to revise this material variances one more time, and we'll try to solve a little bit bigger problem. So I hope you guys have enjoyed this video. If you really like this video and you want more series of videos on standard costing, you definitely like the video and then you comment. So you let me know that you want videos, right, guys? I'll definitely see your comments. I'll try to reply to all of you, and then definitely I'll try to create somehow. I'll wake up at the night and I'll try to make a video so that I'll be little bit helpful for you to crack your respective exams. Right, guys? So this is PK sir signing off. Jai Hind and all the best.